The third quarter of 2025 marked a pivotal moment, a period defined by disciplined focus, financial pressure, and a cautious but determined push toward becoming a public company. It was a quarter where every decision mattered, every dollar counted, and every operational step moved the company closer to a future built on innovation, efficiency, and sustainable mobility. And at the center of it all was a commitment to proving that the next era of transportation can be built through discipline, engineering focus, and transparent execution. The leadership made it clear. The priority was preparation for the transition into the public markets. This meant building out the validation line, controlling cash burn, and putting the structural groundwork in place to support future production. Supported by $2.5 million in grant funding from the California Energy Commission, the company navigated this financial balancing act while working to secure the final resources needed to begin its next major phase. With the Nasdaq listing complete and a substantial equity line of credit established, the focus shifted toward obtaining the incremental capital required to finish validation and move closer to low-volume production, an important milestone for any emerging automotive innovator. As the quarter unfolded, the company concentrated on its operational backbone, the construction of its validation vehicle assembly line. This wasn't just an engineering challenge, it was a full organizational effort to bring production-intent parts together, assemble a reliable test fleet, and gather the data needed to refine the manufacturing process. The validation fleet represents the bridge between concept and reality, and building it with precision is essential for scaling any advanced vehicle platform. Financially, the landscape was challenging. As of September 30, 2025, cash and cash equivalents stood at $12 million. According to the quarterly filing, this position created substantial doubt about the ability to continue operations without new capital, a reality that many early-stage companies face when approaching production. But despite this pressure, important financial pathways were unlocked after the quarter's end. On October 16, 2025, the company's Class B common stock began trading on the Nasdaq capital market, a major step toward gaining visibility and credibility in the public investment space. Shortly after, an equity line of credit of up to $75 million became accessible, creating a structured mechanism for raising funds as needed, subject to market conditions. With the effectiveness of the corresponding registration statement on November 11th, a new financial tool became available to support future cash needs. Alongside these developments, the company continued work on its remediation plan for two previously disclosed material weaknesses in internal controls over financial reporting. Strengthening internal controls is essential for long-term trust, especially for a newly public company. The quarterly filing also included updates on the ongoing SEC investigation and the active Aptera litigation, underlining the legal and regulatory complexities that accompany rapid growth in an emerging industry. The report further detailed the use of non-GAAP financial measures such as adjusted net loss and adjusted net loss per share, metrics used to provide additional clarity into operational performance by removing the effects of non-cash stock-based compensation. While these measures offer insight into cash-based operations, they come with limitations and should be reviewed alongside official GAAP results. The company encouraged stakeholders to consider both sets of information to gain a complete picture of financial performance. Behind the financial data and operational updates lies a broader mission: advancing the future of efficient transportation through highly aerodynamic, solar-assisted mobility. The company continues to push for breakthroughs in sustainability, material science, and real-world energy efficiency, driven by the belief that transportation can be both advanced and environmentally responsible. As always, the report included forward-looking statements, reminders of both the enormous potential ahead and the many risks that accompany innovation. These statements highlighted uncertainty around supply chain timing, component availability, hiring, manufacturing scale-up, access to capital, and the overall ability to advance toward production. They also emphasized that while plans and expectations are shaped by the best information available today, circumstances can evolve quickly. The message was clear. The company is navigating a challenging but opportunity-rich environment. With public market access secured, a fresh financial mechanism in place, and validation efforts progressing, the next phase will hinge on execution, capital availability, and the successful transformation of engineering progress into early production capability. The road ahead will require precision, resilience, and continued transparency. But the foundation laid in the third quarter marks a meaningful step toward bringing a radically efficient vehicle platform into the world. The quarter closed not with a sense of completion, but with a renewed sense of purpose. The journey is entering its most critical stage, and every milestone from here carries the weight of years of development and the expectations of a growing community of supporters. What happens next will determine not only the company's trajectory, but potentially the direction of solar integrated mobility itself.